Well, it's time for another market update here on the Smart Mortgage Show. We're going to be talking about where rates are, what's happened over the last few weeks since we last had an update, and why rates are kind of staying in this tight range. It's all coming up next right here. Welcome in. I'm Ben George with Bill Litton of Cross Country Mortgage. Bill, got a good show. Another time for another market update as we begin the final month of 2025. Good to see you again. Hope you had a good Thanksgiving and hope you're getting some work done during this busy holiday season.
Yeah. Thank you, Ben. Good to see you as always. And we're going to stay busy right, through the holidays, maybe unwind, Christmas week, but certainly staying busy. And it's been a good year so far. So looking forward to 2026.
Yeah, very good. Well, we got some business to take care of before then. And I know it's still, I know if you are in the market for a home, that never stops, right? Even for the holidays. In fact, I actually closed 2 days after Christmas when I bought my home. So I know that it never sleeps. So if you have questions for Bill, you want to begin that process or thinking about either trying to close this month or, hey, early 2026, you have that goal of becoming a homeowner. You always reach out, smartmortgageshow.com. You can also text the word LEND to 21,000 to begin that process and have that initial meeting with Bill. Again, text LEND to 21,000. So the big question is always, Bill, as we've kind of kicked things off here, what is the latest on rates? Kind of where do we stand? And what have we seen these last few weeks?
Yeah. So since August, September of this year, we ticked down into the lower sixes. So below 6.5%. And we've remained in that range. So depending on the survey that you look at, right now we're at about 6.3%. So, kind of think of it right now as like we're not in the sevens anymore. We're firmly in the low 6% territory. Now, people keep asking, when are we getting into the fives? And I wish I had a clear, concise answer for that, although I don't know that anybody does. But I think that the big win here is that we're firmly in the low six territory as evidenced by this tight range. And that in of itself is really good news.
Yeah. So let's talk about that tight range for a minute. Why have we kind of found this area and why are we kind of stuck here? I know we've been talking about, hey, maybe we'll creep into the fives. And that's been a conversation we've had for a lot of the year. And I know people keep asking that question. I think that's really the needle mover for a lot of people trying to get out of maybe their current home and move into a new one. But why do you think we've kind of been stuck in this range?
Well, I think there's a few reasons. One is, the Fed has continued their message of lower rates over time based on inflation and job numbers, right? There are two mandates that they have, 2% inflation over the longer term and maximizing employment. So, both of those, inflation is a lot cooler than it was during COVID. It has come down dramatically. Now, it is not at the 2% desired number. So we're still a little bit off of that number, but it has shown a lot of decrease in the right direction. So that's what is getting us from the sevens into the low sixes. Also, the Fed has ended their quantitative tightening program where they are decreasing the size of their balance sheet with regard to mortgage-backed securities. So that was also another mortgage bond friendly change in the Fed's stance. As well, recently, the 10-year treasury has been trading within a tight range, mainly on that piece of it because of there has not been a lot of data with the government shutdown. So, no data equals somewhat consistency in that market. So now as reliable data is released, that could certainly change the direction of the 10-year treasury, which will absolutely affect 30-year fixed rate mortgages. But right now it's been status quo. All of those factors, I think, have us at the moment firmly entrenched in this, 6.5 to 6 to 6.5% range.
Yeah, and it's a better range than we have been in over the past couple of years. So, there is some good news there. Is there anything you're watching the rest of this month? Like what's coming up here in the near future, Bill, that could be newsworthy that could change rates?
So again, as data comes back online based on the government being back to work, and the Bureau of Labor and Statistics, and all the other economic indicators that depend on people being at work, as that data is made available, I think we're going to see either trend in the same direction, or for some reason, if that affects the inflation numbers or has an effect on 10-year bond yields, then that also could change 30-year fixed rate mortgages. So we're going to be watching that closely. Again, inflation, where the 10-year yield goes, softer job numbers, these are all the real movers. But what I would say is, the big picture is we do feel like we're still headed in the right direction, which is a slow grind lower over time.
All right, welcome news. Again, if you have questions for Bill, want to learn about the mortgage options that are available to you, and there's a wide range, right? Some that you might not even be aware of. We talk about many of those here on the show, so make sure you go back through our catalog of episodes and videos on YouTube as well to check out some of those and get more information. But you can always get in touch at smartmortgageshow.com, or just text the word LEND to 21,000. Bill, to kind of close this out, I know this is our final update of 2025. Just kind of your thoughts looking back on the year. Kind of how would you summarize the year for what you do and for the mortgage business and home buying and just the markets in general? How would you highlight 2025?
Well, I mean, what I would highlight is an old message that we've said consistently over the years, over this podcast and over any of the other communications that we put out there, is just, we're probably not going back to 3% rates anytime soon. So if you're trying to time the market, it's very difficult. There's not many people that can. Warren Buffett claims to not know how to time the market, but it's more about time in the market. And if you bought 2 years ago, you're probably refinancing to a lower interest rate. If you're buying at the end of 2025 or in 2026, you're in a lower rate range now, and rates will probably continue to decrease. All along, home values have continued to increase. So the main message is, if you're in a financial position to purchase a home, if you're a first-time home buyer and you're renting right now, you might want to take a good hard look at the benefits to buy over rent. Now, buying is not right for everyone. If you're headed out of the area within 2 years, the cost to buy and sell might not make sense. But for a lot of people that are renting, buying, if you're going to stay in the same area and you're not putting yourself in a bad financial position, and we're going to look at all of those factors with you, buying makes sense. And it's not about timing the market. It's about time in the market. And if you're a move-up buyer, you certainly feel the value of time in the market, because you're going to take all the equity that you've gained over the last X amount of years, depending on how long you've been in that house, and roll that into the next house. So the real message for us is, we believe in housing in the U.S. The housing, sector of the economy is the largest sector. It's really important. It's had a famed, a glorious, amazing history. And I think that's going to continue into the future. And, part of the American dream is being a part of that.
Absolutely. Well, hopefully you found this show helpful throughout the year. We still have some more episodes coming up. We'll also talk about the 50-year mortgage that's now being floated out there a little bit. We'll get Bill's thoughts on that coming up. Please subscribe to the channel if you haven't done that already. We'll be back again soon, another episode of the Smart Mortgage Show. Thanks for joining us. Bill, have a good week.
Thanks so much.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.